In this video, we discuss why, for many of you, now is not the right time to pay off your mortgage early. Coming up next on Holy Schmidt.
Holy Schmidt!
There's a tried and true rule that exists in just about every westernized country in the world, and that rule is to pay off your mortgage as soon as possible to secure your future. There are a lot of good reasons for this. Your home is your safety net. It's your firewall against the bad things happening out there in the world, so you need to protect your home and access to your home at all costs. This is particularly true for retirees who no longer have income from a job. A home is so much more than numbers on a page for most people. It's what protects the family. It's where you go when the world gets to be too loud. In short, the value of your home supersedes something as common as what to do with your investment dollars. But the world is upside down right now, and rules of thumb need to be constantly reevaluated. First of all, if your home is already paid off, a lot of the issues that I'm going to talk about don't apply to you. For the rest of you, the next 5 or 6 minutes are going to be very, very important. Let me begin by saying something that people don't necessarily fully understand, and that is that debt is just equity in the mirror. If you have an investment and you had the choice between that investment having a higher return or a lower return, a higher yield or a higher dividend or higher growth or all three, which would you choose? Everybody would choose the higher return, particularly if that return was guaranteed. And of course, we know equity returns are not guaranteed. That's why they're called equity. But your cost of debt is guaranteed. You know for sure what you're going to pay. You signed a document saying that you would pay a particular amount at a particular interest rate, and that interest rate is your contract with the lender. But it's also a contract the other way. The lender can't raise your interest rates outside of what is already in the document that you both signed, as long as you're in good standing with the lender, of course. And in this day and age, debt at a lender is deteriorating, the value of debt at a lender is deteriorating faster than the interest rate that you are paying on that debt. Let me explain. If you lent $100 to a company, it comes usually in the form of a bond. I lend the company $100, they give it back to me at the end plus interest that has either been accrued or been paid along the way. But with inflation running at 8 or 9%, that $100 bond 1 year from now will have the purchasing power of $91 or $92. What happens if the lender holds a mortgage that you took out for $100,000 and your payment on that mortgage is 3.5% per year? Well, if inflation is running at 8%, that means that the lender is losing approximately 4.5% per year on having the capital out to you. Of course, this is just this year. Next year, it will undoubtedly be different, but we are talking about the here and now because we don't know what the future looks like at the moment. And by the way, if you hold a mortgage that's between 3 and 4%, interest rates probably won't be this low again anytime in the near future. In fact, stagflation, the period between 1974 and 1982, interest rates got up to 17+% in 1982 before they started to come down. That's for a 30-year mortgage, of course. Imagine paying 17.6% for a 30-year mortgage. But what you want from your investments is a high return and you want it guaranteed. Not likely in this day and age. But what you want from your debt is a low cost guaranteed. Very likely in this day and age, particularly if you reset your mortgage over the last 5 years. Still, no debt is better than some debt, and using your cash flow to pay down your mortgage makes sense as long as you don't have to sell assets to do it. If you think about paying off your mortgage early, part of what you're paying is the legal requirement. But if you're paying it off early, you're making additional payments that reduce the principal amount. It's that amount that I'm talking about. Because if you have to sell assets to pay that additional amount, and the world right now has assets that appear to be at depressed prices, paying off your mortgage still makes some sense if you have no other debt, no other higher yielding debt, and you don't have to sell assets to do it. And if you think about someone who's in retirement, there's a good chance that they'll have to sell assets, probably from their 401k or their IRA, to make additional principal payments on their loan. And getting back to the point we made at the beginning of the video, your home is your safe place, and sometimes the rules don't apply to the sequencing of when you pay down your debt. But I will tell you, your other debt, primarily credit card debt, which has a floating rate depending on what's happening with interest rates, has probably gone up and it will continue to go up in the months ahead, more than likely. So if you look at your credit card debt, and historically you've been paying 17, 18, 19%, and you chose not to pay that down, but instead put the capital into your home, and people do this, well, that would be a big mistake for most people. That debt is far more expensive, and frankly, your credit card debt is probably going up because it's floating rate debt. And that takes front and center focus for most people, getting that paid down before you pay down a fixed 3 to 4% mortgage. And back to the cash point, cash is king for a while. Cash flow is king for a while anyway, because cash flow allows you to not sell assets. And in fact, if you have extra cash coming in, particularly from a company pension or your job if you're still working, cash is also important for another reason. It is true that if you put $100 in your checking account this time last year, it has the spending power of $91 or $92 today, but cash does offer one thing that is extremely important when you have the trifecta of inflation, rising debt rates, and falling equity rates. Cash offers flexibility. And flexibility is also important. Flexibility is also king, in fact. The flexibility to pay your bills without selling additional assets. We talked about that. The flexibility to help family members in need. The flexibility to sleep at night. The ability to sleep at night anyway, knowing that tomorrow you're not going to have to wake up and sell something that took 20 or 30 or 40 years to build at a price that isn't appropriate for the amount of risk and time you put into it. And it's important to acknowledge that people have different risk tolerances. For those of you that thought that you had a high risk tolerance, my guess is your high risk tolerance today is a little lower than it was a year ago when you checked the box that said, I have a high risk tolerance for losses in investments. Still, with conviction, that high risk tolerance actually could be a windfall for you in the future. The important thing to note is that risk tolerance is different for everybody. Someone with a low risk tolerance may in fact still want to continue to pay down that mortgage because that is their safety net. But whatever you do, the most important point is to do it with your eyes wide open. For most of you, for many of you anyway, this means seeking the guidance of a professional financial planner, someone who knows your situation personally and can help you with your exact details and make you or help you come up with the best decision for you. Admittedly, this is all predicated on the belief that paying off your mortgage early is not as good as using that cash flow for other things, and the safety net that comes with paying off your mortgage early is not as important to you as the safety net of having cash flow for other uses. If you like this video and you'd like to see more like it, please make sure you click subscribe and turn on notifications. What's happening now in the world requires diligent focus, and I work very hard to get the information that's out there in here for you so that you have a good understanding of everything that's going on. Also, check out this video that I recorded recently on why retiring in Portugal may be the nuclear option to all of the financial and spiritual woes that you may be feeling right now, given the world we live in. This is Jeff Schmidt. Thanks for watching.